Welcome to Mandates and Megaphones, hosted by Jeremy Maggs, unpacking the politics, promises and power plays behind the G20 summit.
Hello and a warm welcome to another edition of Mandates and Megaphones here on Moneyweb. It's in association with Standard Bank. I'm Jeremy Maggs, and global economic diplomacy is now entering a more volatile chapter. American tariffs are reshaping trade flows, geopolitical conflicts continue to unsettle markets, climate negotiations remain deeply contested. And into this environment now steps South Africa as host of the G20. I think carrying both the weight of global expectation and also, hopefully, an opportunity to shape an ambitious agenda. And few people have been closer to those negotiations than my guest today. Dr. Rashad Kassim is Deputy Governor of the South African Reserve Bank, one of the key figures driving this country's financial and technical priorities in the G20 year. His work, as I understand it, has focused sharply on the future of cross-border payments, the reform of high-cost remittance corridors, and the push for deeper African representation in global financial rulemaking. A very warm welcome, Dr. Kassim, and thanks so much for talking to us. A lot of detail that we need to get into, but as the G20 formally gets underway, maybe a starting point for us is how you would describe the global environment that we're stepping into, and what does that climate of tension and maybe fragmentation that I referred to mean for South Africa's role at the table? It's going to be tough, isn't it?
Yes, Jeremy. Well, I suppose that the main issue to focus on is that South Africa is the president of the G20 after Brazil last year, India the year before, and Indonesia the year before. I think that the global environment was particularly challenging for Indonesia, where you had the beginning of the Russian-Ukraine war. It made it very hard for Indonesia to get agreement on many issues. That process continued to some extent under India and Brazil. But then on top of that, you had the Middle East conflict. And now in South Africa, it's the culmination of unresolved geopolitical conflicts and an exciting new president in the U.S. who's kind of thrown the world array in many of the new policies. So it's one of the most challenging times for South Africa to be hosting the G20. And I think that it's in these kind of critical and challenging times where the G20 particularly becomes important, because it is not a binding legal forum. It is a cooperation vehicle for countries to get together, share experiences, discuss ways of resolving global economic problems. So in a sense, the rationale and the purpose of the G20 is made more relevant when you have a turbulent global economy.
Having said that, though, do you think the G20 then is still capable of producing genuine consensus in this world that you've just explained to us is clearly fragmenting?
If you look at the history of the G20, Jeremy, one of the most important successes of the G20 was the ability to reorganize, reform the international financial architecture in the context of the global financial crisis. So the origins of the G20 goes back to the Asian financial crisis. And the first time we hosted the G20 was primarily the finance track. And this time it's the first time we're hosting the summit. But the finance track really, really works well when there's a financial crisis. So in that context, the G20 was able to introduce global regulation on banking to ensure that we don't have a banking crisis. We had something called the Financial Stability Board, which was set up. We created banking rules around Basel 1, 2, and 3. So in that sense, the G20 works very well. It is much harder to get consensus when the nature of the conflict is geopolitical. Here, I think that, we kind of divide the agenda items. So, for example, it's very easy to get consensus on cross-border payments. No country will object to the need to improve the efficiency of payments, to improve the speed of payments. So in some of the kind of maybe, for want of a better word, the run-of-the-mill kind of issues, it's much easier to get some consensus. In other issues like what does the G20 community believe geopolitical conflicts has done to global economic prospects, there it's very hard to get consensus.
Let's talk a little bit about cross-border payments then. And I guess one's got to ask the question in that respect, why sub-Saharan Africa is still the world's most expensive region for remittances?
Part of the problem is that it depends on how well-oiled your payments infrastructure is. It depends on how developed your financial system is. And one of the reasons why cross-border payments amongst some of the Asian countries have been lower than what it is in sub-Saharan Africa really has to do with the fact that they have high volumes of trade. They've invested enormous infrastructure, and that goes along with higher as their per capita incomes grow. They look for the convenience of ensuring that payment flows are seamless. The problem in sub-Saharan Africa is a very specific problem around remittances. There are some countries that are relatively small and poor, others are relatively large. So it's a mixed bag, and it makes the cross-border payment challenges slightly more difficult.
Do you think it's a regulatory issue or an infrastructural issue?
There are many facets to unpacking cross-border payments, and this is what we spend some time during the year in the G20 forums looking at. One of the most important deterrents to getting cross-border payments costs down is getting two countries to speak. It's about allowing, the South African authorities, say if it's the central bank and some of the regulatory institutions, along with, say, as an example, the Zimbabwean authorities, to agree on ground rules, to agree on the big word that your users, some may be aware of, and your listeners, some may be aware of, others is creating interoperable rules. How is it if you want to transfer a sum of money from South Africa to the other country? How do you get over a few hurdles? Number one, does the technology speak to each other? Are the technological rules compatible? Platforms, rather. Other rules around anti-money laundering and so on, and know your customer, are they harmonized? So sometimes, in some circumstances, it could be that the technology is the deterrent. In other circumstances, with the growth of technology and technological advances, it's actually the willingness, the legal infrastructure of the two countries that really matter most for these kinds of things. And this is exactly what gets discussed at the G20. How to build momentum, how to get governments to buy into this.
Do you think it's ultimately going to be commercial banks or fintechs, though, that will most likely drive the next wave of reform in this respect?
Commercial banks historically have been engaging in what has been the predominant platform for cross-border payments, and that has been correspondent banking. But I think that no doubt that one of the impetus to global cross-border payments has been the rise of fintech companies. Fintech companies, innovators, they play an important role. They bring competition to banks, so banks themselves, in some form or other, invest in some kind of fintech activities and become competitors to fintech, and that's all very good. The dilemma that we often face is that fintechs are not regulated in the way that banks are regulated, and in fact, that's one of the big issues at the G20. Is how do you create level playing fields? How do you create harmonized rules so that fintechs thrive and operate, but do not undermine the financial system?
Is it harmonized rules or better standardization of data, do you think?
So they are two different things. I mean, standardization of data means that countries should have very, very transparent mechanisms to be able to assess what kind of cross-border trade is happening, what is the time it takes for a transaction to be cleared, who's trading, what are the volumes of trade, and so on. So those are important for the transparency of making the system work. Harmonized rules are, I guess, the differentiation could be blurred at times, so that there's a logic in your question. But harmonization rules are, what are we going to do about different values? So it may be that any transaction under 1,000 Rand will not have the same scrutiny from an anti-money laundering point of view that, say, anything above 200,000 Rand. Then you've got to convert it to a common currency. So those are the kind of rules versus, ensuring that the data is transparent.
Are you worried that after all of this process that you've been part of, that it risks being too slow for the urgency that our continent is facing?
That requires a bit of an understanding of the limits of the G20 and what should be done independently of whether you're the president of the G20, whether you're a member of the G20 or you're a non-member of G20. I think that at the end of the day, the G20 is a forum that brings together countries to provide a more global sense of what the challenges are. So, for example, we've been discussing the cross-border payments issue. There have been many attempts to meet some targets around the cross-border payments. And we're not meeting those targets globally, partly because the G20 community, in setting the targets, didn't realize some of the challenges, particularly in sub-Saharan African continent. So what does the G20 does? It focuses the mind. It says to richest countries, how can we provide technical assistance to countries that find payments more challenging? It elevates the issue to big global institutions like the IMF and the World Bank. So the G20 plays that overarching role. But in the end, it is the African countries themselves that need to create the momentum. It is the political leaders. It is the private sector. That cannot be done by the G20. The G20 provides some enabling environment, but the actual work has to be done by, we have, for example, in the central bank, we have several forums where payments are a center of the agenda of the governors. We have the Central Bank Governors Forum. We have several forums. So that's where it's going to be driven. We're hoping that the G20 has given it more impetus.
But I also sense a note of optimism. If I read you correctly, you also said that African priorities have been captured. I hope I'm quoting you correctly. If I am, what does that mean in practical terms?
So what is the big debate? When a country chairs the G20, a country has to decide what are its priorities. And in determining its priorities, it sets the agenda for the year. It assumes by setting certain kind of priorities, it gets the global policy direction moving in a particular way. In South Africa's case, we obviously realized that our major challenge is to be using our location and as being part of the African continent as the vehicle to push priorities of the G20, whether it comes to debt, the problems of debt, whether it's the problems of economic growth, whether it's the problems of artificial intelligence, the challenges of artificial intelligence. These are what we've pushed at the G20. So I'll give you one example on artificial intelligence. When we consulted, as we were preparing our priorities for the G20, we consulted with a number of colleagues, particularly in the central banks in the continent. And we asked our colleagues, what are the big issues that worry you globally? And for example, other than payments, one of the big issues were artificial intelligence, that you've got this digital divide between the developed countries and the developing countries. And there was a concern that, the rapid adoption of artificial intelligence may create even a stronger digital divide and may have some unintended consequences for African economies. So that is an issue that we took to the G20, talked about other negative spillovers. Will the gap in productivity between the rest of the world and the African continent grow as a result of this? Would you create instability through kind of finance and so on with AI bots and so on? So this is how we prepared our agenda, taking into consideration the challenges in the continent.
Well, Dr. Kasim, let's continue with artificial intelligence. It's both a risk and a benefit. How did you navigate that gap?
With all technology, the most obvious thing to say is maximizing the benefits and minimizing the risks. This is a broad, big debate. In the G20, we tackle the artificial intelligence issue at two levels. At the broad macroeconomic level, we asked, what will the G20 mean for labor markets, global labor markets? Who would lose jobs? Whose jobs would it augment? So maybe people like you and I, Jeremy, we could leverage artificial intelligence to make our lives easier. But there are some that may lose out from AI. So it sounds very simple and textbookish. In reality, it's a much more complex process. But you say, what are the benefits of AI, and how do we maximize those benefits? But how do we prepare for the social impact, the negative side of AI? Is it retooling? What needs to be done? So, what common sharing of experiences exist among G20 countries to do this? For example, one specific issue on AI that central banks are dealing with is that at one level, we as the central bank can deploy AI tools to enhance our efficiency, but we're also dealing with a real problem that many people can use AI to undermine the financial system. And we have to get up to how we defend the financial system. They can use AI for cybercrime. They can use AI to undermine the banking sector. So what we do in central banks is we start investing resources into understanding what this means. So one part of the central bank is how can we benefit from it? The other part is, the other side would say, what are the risks? Who's using AI to undermine financial intermediation and the monetary system? So banks cannot sit back. And in fact, some of the most robust discussions that we've had at the G20 is countries sharing experiences of how they use AI in their central banks to create resilience to the prospects of instability that it could create, but at the same time benefit from improving how supervisors go about supervising the financial institutions.
Dr. Kasim, I think this issue is probably going to be the defining one in the next 5 to 10 years. Do you think enough space and ventilation is going to be given to it at the summit?
So it's hard for me to talk about how the heads of state are going to craft their discussion. It is certainly, the case that the heads of state will have the combined communiques, chair summaries of the different working groups. It features in the working group, it features in the finance track, and I guess it's up to the politicians to decide in their limited time what they want to flag as the most important issues. It may be explicit under the global economic challenges. It may be more implicit. If it's implicit, it doesn't mean it is an important issue. It's just what occupied the discussion was of a different nature.
I want to, if we've got time, just reference trade and climate in just a moment. But I wonder if I could ask you a personal question in this conversation. What did you personally learn about global power dynamics from being inside the room and a key participant?
So I was, along with the Director General of Treasury, Duncan Peterson, the two of us were what you call, the deputies of the finance track. And the role of the deputies in the finance track is to set the agenda for the G20, to substantively discuss with our peers in the G20 community what are the most important issues that we need to put on the table. And obviously, this is done in consultation with our principals, which are the Minister of Finance and the Governor. I guess the one personal advantage is that I have every deputy governor of the G20 on my phone on speed dial.
That
so
helps.
I've learned a lot from that. I've cultivated context. I've got to know a community of highly trained, skilled central bankers and Ministry of Treasury. But the biggest benefit of the G20 is that if we have a crisis, if we have a global crisis, I can call someone tomorrow at the Bank of England to say how you're dealing with it. I can call someone tomorrow in Brazil and say, what are you experiencing? And I think that it's this kind of informality that is most rewarding, getting to know people that ordinarily you wouldn't know, understanding it's the lunches, it's the coffee We had fantastic, coffee stations where people, in all the meetings, people sat around, chatted. That was the most rewarding thing. But, your real question about negotiations, you realize that it's not good enough to be a technician, that in order to be able to sell something, your requirement is not just the technical skill, but it's your ability to package. So I say to people that what G20 has taught me is to become an expert in the packaging industry.
And I was just thinking as you were answering that question, how I would love to get my hand on that speed dial list of yours, Dr. Kasim. I think that would be very valuable. Let me ask you a little bit about the US tariff drama, the escalation. Did that narrow, do you think, the negotiation space or simply harden positions?
I think that sadly, I would say, Jeremy, is that all the hard work on trade was done bilaterally, which I think in some ways went against the spirit of multilateralism. One must remember that the most important intervention or the most important creation of the World Trade Organization was what we call the most favored nation status. And what the most favored nation status basically means is that if a country imposes a 10% tariff on the world, it has to impose that 10% tariff on every other country on condition there's a free trade agreement with the other country or a customs union and so on. So what the most favored nation status means, it means that there's no discrimination. We are direct victims of that discrimination now. So for example, if you take, say, South African wines, and we are exporting wines to California or the US at 30% tariffs, maybe, I don't know exact numbers, but the Chileans or the Australians are exporting wine at a lower tariff. So what is done is that it's exactly the antithesis of what the G20 is meant to do. It's meant to kind of create level playing fields. Given the nature of how U.S. policy has evolved, the WTO has not been able to kind of take on these issues. The WTO sits at the G20 forum, has raised the concerns about fairness in the global trading system. It somehow became an issue. It manifested itself in countries raising concerns about global imbalances and whether those global imbalances have to do with the macroeconomic of a country. Is it because you don't save much that you have high current account deficits, or does it have to do with the fact that the current trading system is not fair? So I don't think that we were able to get into a serious discussion of that. I think countries committed to principles of the need to create a fair trading system. But given the sensitivity of the issues, I think a lot of the discussions take place behind the scenes.
And that's where we are going to leave it. Dr. Rashad Kasim, Deputy Governor, the South African Reserve Bank, thank you so much. And I think what's clear to me from this conversation is that technical reform is not merely administrative, as you've just been hearing. I think it's developmental, it's obviously political, and really a test of whether global systems can work positively for the continent. So that's it for this edition of Mandates and Megaphones, brought to you by Standard Bank. Thank you for listening. I'm Jeremy Maggs.
Welcome to Mandates and Megaphones, hosted by Jeremy Maggs. Unpacking the politics, promises, and power plays behind the G20 summit.